gentlemen of the crypto space. We're live on a Monday, March 17th at 11:44 a.m. Is nature healing? What was 2024? What did it mean? What was the structure of the system in 2024? What was going on? What is going on now? How does what was going on in 24 compare to what is going on now? So when you're looking at technical data, you have a concept called correlation, where let's say the dollar's going up and the stock market's going up. Is that natural? Is that the way things are supposed to be? Because sure as hell that was what was going on in 2024, including with the crypto market. You know, broadly speaking, 2024, we did have, so in 2024, here was your two primary catalysts for appreciation. But we ended, I take it back. Maybe in 2024, we did have meaningful dollar depreciative legs in an isolated region. And that is something I've talked about. So here was your leg in October of 23, which ended in January. And that was the Cosmos cluster of activity towards the beginning of 2024. And then we had Solana activity towards the middle of the summer, and there was your dollar depreciative leg. So in a relatively short time frame inspection from a daily perspective, you did have a dollar depreciative leg. But generally speaking, it was in a cluster that is a relatively elevated dollar value compared to where it has been in previous bullish periods for the crypto market. So they were very isolated and relatively small. So in 2024, generally speaking, I would say the dollar was up, crypto was up, the stock market was up. We have not broken down from this elevated region yet, and we've come down below the 103.56 line plenty of times, but we have not gone into levels that are more consistent with the 2016, 2017, and 2020, 2021 quote unquote bullish markets for the crypto space. We are below 103.56 yet again, pushing 103.33. So what's most notable right now is that you have a dollar decline, and if you look at total three, things are meaningfully up. So my two cents is what we experienced in 24 wasn't a total three rally of the likes that we will see when the dollar significantly comes down. What we saw was very isolated activity to two particular subcomponents of the economics that we look at in crypto markets. Cosmos and the airdrops with Celestia and Elf were very popular. That was at the beginning of the year. And then Pump That Fund did what it did on Solana towards the middle of the year. But that's meme coins and airdrops. And I still have a high opinion of Cosmos. Momentum has been lost significantly. The tech is still there. But that is an isolated component of these crypto markets. That is not the core of anything that I talk about. Those are far out on the considerations list of, oh yeah, that is going to change things. So in that regard, mainnet remains king. That's where all the money is. All on mainnet. Everything else is not even just microscopic. It's in many regards negligible in consideration of what the hell is going on here. And we're not talking about the Ethereum price. Everyone gets lost in the Ethereum price, and everyone gets lost in TVL. The inspection is dollars. We literally started and have been talking about dollars from the start of this stream. So now we're migrating towards what the hell are dollars in the context of literally just mainnet. What does it all mean? clearly we don't own just things on mainnet. We own things outside mainnet on L2s, alt L1s, even on other types of chains like Cosmos hubs and Solana. And those all have a different risk profile. I would argue anything other than mainnet has an increased risk profile, significantly increased, warranting a significantly smaller position size. Mainnet has a longer life, uh, longer span of existence. It has a decreased risk profile. It has all the financial activity with regard to the quantity of dollars that are being um, consumed or used or churned with regard to velocity, velocity of money. That kind of concept applied to the crypto space is always fascinating. Traditional financial terms and concepts applied to the crypto context. Total 3 up 1.76%, hovering around a moving average. The trend from a daily perspective. Let's zoom out to the weekly and see what the trend looks like. Oh, yeah, look at that 200 SMA up and to the right. We didn't even have a mean regression. We literally, so from a weekly perspective on total three, and this is probably as broad as I would go because this obviously incorporates things other than mainnet, but this tells you market cap. I'm not too fond of market cap. It's an inflated inspection as compared to looking at dollars. So I would rather look at total dollars, but that's literally up and to the right. It's even more up and to the right than this. But that is a forward-looking indicator. If you're looking at dollars on mainnet or dollars on any network for that matter, it's a forward-looking indicator of potential price activity, potential price appreciation. That's a forward-looking indicator on this. So interestingly, if you just look at DeFi Llama, you'll see it's up and to the right. Therefore, in the future, this will continue to be up and to the right. And that's exactly what the 200 SMA on this chart means from a weekly perspective, up and to the right. So everything since 2022 is still going up. Look at that trend line. We've literally just had, and it's literally just had a mean regression from a 100 standpoint. Dip below with the 100, back breach, 100, 200 cross. And if you want a golden cross, it's a 50 SMA, 200 SMA cross, traditionally called the golden cross. We literally hit all-time high compared to 2021, Q4 21, and got rejected. It just so happens we literally just expressed support on the 50 SMA. So we had a golden cross, a mean regression to the 50 SMA, an interaction with all-time high, and then yet another mean regression to the 50 SMA. This has got to be the most, not the most, but one of the most incredible charts from a, all right, things look great. Things look really good and healthy. This is such a healthy chart with, in terms of continued attention, continued adoption, appreciation, monetization. I mean, literally, just I just explained this chart. It's like, and it's wow. It really is wow. Golden cross, 50 SMA mean regression, interaction with all-time high, back down to the 50 SMA for a higher low than the previous mean regression. And it's like, all right, so where's the catalyst? What's the catalyst? All right, dollar down. So the dollar go down, and this thing blows through and finally breaches all-time high. We haven't been higher. So everything in 2024, nothing. Literally just a retest of all-time highs. And that was always my impression, given how isolated financial activity was in 2024. Minor parts of the market. We didn't see real mean regressions from the downside across the fintech space until Q4 of 24. Stuff like Curve going from 20 cents to all the way to a buck 30, buck 40, and back down to 38, and now it's at 44. It's up 100 plus percent. from bottom November of 2024, up 100 plus percent in a couple of months, 5 months. It's called a mean regression back down to a higher low. That's all. That's my expectation. Everything is higher lows across the board thus far. You understand that? So the fintech space of crypto was at its lows in November of 2024 and had a nice rally. We can inspect that from a total three perspective. It hit all-time highs, rejected, back down to moving averages, and those moving averages are putting in basically higher lows compared to November 2024. The setup is extraordinary. The charts look extraordinary. The markets look healthy. The markets are monetizing, and this stuff takes time, but it's all up and to the right. Just look at that 200. Look at that 200 on the weekly, up and to the right. See, if you're looking at like Bitcoin data, it's myopic. It's too narrow. You need a broader perspective. You can't just look at Bitcoin. If you're trading Bitcoin, you look at Bitcoin data. But if you want to understand the state and structure of markets, you can almost argue Bitcoin data is clearly manifested in total two, total three, but it's just a part of a larger picture, just like the price of Ethereum is just part of a larger picture. Like, oh, Ethereum's dead. The price of it's dead. What does the price of it have to do with the amount of stable coins on the network? Okay, so it's if the price is down, it's cheaper to engage with the network, especially with gas Gwei collapsing. That means financial activity has a capacity to significantly increase using significantly more stable coins. If anything, the stable coins heading onto Ethereum just further reinforces the narrative that that's where the financial activity or the majority of financial activity is going to take place. So, what does that mean? Those are forward looking indicators of increased financial activity in a backdrop of more dollars available, which means when crypto does what it does and it gets disgusting and exuberant, that means the numbers just get weird. And we've seen conditions like that. We saw conditions like that in 2024, get alone looking considering 2021 just gets gross because people do stupid things. So the prices will attain stupid numbers. So these markets look great. Moves down to 101 minus 5%. 10-year yields coming down. So the 2 year long end getting bid. So what does that say with regard to what I've talked about many times? What are the most bullish conditions for the crypto market? Dollar down, long end getting bid, and move volatility collapsing. This is the right direction. Uh, Everything that with regard to my expectations are playing out thus far. Dollar down, move down, 10-year yields down. When you see these three in red, if they keep going red, crypto goes off to the races and gets gross. Now, stocks. Interesting that stocks are flat. And that's my speculation. I don't really have a speculation with regard to crypto. I'm pretty sure like that's less of a speculation. That's more of like that's how the market works. That's how everything's going to play out. And based on my theses, plural. What plays out with the stock market is more of a speculation. So that's interesting. Just take that in for a second. Crypto's going to go up under the conditions that say crypto is going to go up, dollar down, treasury yields down, prices up, and treasury market volatility down. That's what drives crypto into the parabolic mode. What plays out with the stock market, I expect it to go down based on those factors. Dollar down. There's plenty of reason for the stock market to go down and capital to spread out. Well, what is the stock market? I don't know. I don't even almost don't even want to get into this conversation about the stock market. What is the stock market? It isn't the S&P. Stock market isn't QQQ or SPY. Those are ETFs. So that really means nothing. You're talking about like a couple of stocks. So maybe the best conversation piece is like Wilshire 5000 and Russell 2000, in which case this completely collapsed to a mean regression, 100 SMA, and it never breached all-time highs. Never breached all-time highs in 2021, where whatever bullshit was going on in the S&P and P and the Nasdaq clearly breached all-time highs, as you see here, and as you see here, breached all-time highs. But Russell 2000 got rejected literally at all-time highs. So basically, the stock market isn't what people think it is. We think it's those silly headlines on mainstream media, not what the stock market is. Stock market's significantly under pressure. So maybe there's a massive so that's my general sense. My sniff meter says you get a massive rotation out of the bullshit overpriced pig shit into stocks that are still boomer meme coins, but have a capacity to positively influence companies that really deserve more attention, which is really the value rotation, growth compared to value, manufacturing, refining, supplies and materials and stuff like that is really important to our entire society. And clearly, technology is important, but there's a gross allocation of capital, gross as in disgusting. So it's to the point where it's unambiguously a misallocation of capital. So that'd be interesting to see Nasdaq and the S&P come down, and you see the Wilshire 5000, the Russell 2000 go up, which would indicate a curing of the misallocation of capital, and that's a good thing. So when you see these come down, Nasdaq and the S&P, that's not the stock market at all. Anywho, that's my 2 cents. Folks on social media have a common tendency to say, "Is this cycle over?" And what is a cycle? So you got to really dig into what people are saying. And my take is almost always it's myopic, it's short-sighted, it doesn't understand the way global economics works. No such thing as a cycle. What you have is pressures and considerations like how many trillions of dollars need to be refinanced this year. It's a consideration. And that has strongly contributed to what people called the 4-year cycle. But was it ever a cycle? What were the things that gave rise to that cyclicality? All right, why not 5 years? What happens if the next cycle is in 2 years or 3 years? Got to consider all the inputs into what creates this perceived cyclicality. So all that, so that's like a correlation. So people correlated, oh, Bitcoin went up parabolic in relation to what? No, there's nothing fixed about economics. There's nothing that says this is the timetable. But right now, gives a shit about timetable. I'm seeing all the conditions that I've been waiting years to see. How many years? I mean, for me, in my 40s, I look back at 2021. I'm like, all right, we just came out of 2021. It's a couple years later. So it's right. Let's think from 2022 because really the bullish period ended at the end of 2021. It was literally the start of 2020. So we're talking about 2022, 2023, 2024, 3 years. And when you get older, these types of time frames are like, all right, it's 3 years. So finally, after 3 years, which is clearly visible on this chart, and it's certainly visible from a DXY perspective, that this congestion zone, this is the event you just lived through post 2021. You just lived through an event that has taken 3 years to play out. Okay? That's a big deal. This is a big deal. This is a massive event that caused geopolitical knock-on effects. Everything that you've seen in geopolitics and internal politics is a manifestation of this circle. The circle tells a story of everything we just lived through over the last 3 years. But what I'd say is watch what happens when this thing breaks the 200 SMA to the downside. And you don't start the conversation, oh, what does that mean? The dollar is failing or the dollar is going down. And what does it mean when the dollar starts going up? That's too, that's not the story right now. That's the next story. The story upcoming is watch what happens when it goes below the 200 SMA on the weekly. That's your story. Watch what happens when the move indicator rose below 80s and falls into the 70s and is falling lower. Watch what happens when 10-year yields come down to 3.5%. That's the next story. And those are the market conditions that I look forward to. And those conditions will not last. Those conditions will end because cycles will cycle. Thank you for joining my TED Talk. Anthony Buchan. Good morning, Cap. Much pleasure, much pleasure. Sir Joe, President, accounted for. If you're on X or on YouTube, please feel welcome to ask any questions on your mind. I know the boys on Discord wanted me to talk about a topic. Let me bring up Discord and I'll see if I could bring that up real quick, actually, before I continue on to Sir Joe. You guys were talking about what, Nile? Anything other than mainnet has a significantly increased risk profile, an increasingly uncertain path to monetization. Frankly, Linnea has a decent narrative. It's directly tied to consensus, and consensus is Ethereum. So there is a stronger narrative there compared to Mantle, a stronger narrative there compared to many things, albeit look at the narrative for Avalanche and what's playing out with Faro, and Avalanche um, is more closely aligned with a USA coin. So that's why it has been performing very well. Unexpected, but that is what played out. Obviously, Optimism and Arbitrum have been suffering, but that's not what's important. What's important is not what has been suffering. What's important is identifying the core narratives that could lead to monetization when capital starts to monetize things. What does that mean? Tremendous amount of capital exists on mainnet. Once things start to outperform on mainnet, things bleed over. All of a sudden, everyone's looking for what's the next thing. That's just the way human beings work. So what it bleeds over to is to things that have closely tied narrative. First stop after mainnet is clearly Arbitrum and optimistic superchain. Sonic has a heck of a narrative. I mean, literally, it's the Andre narrative. Andre has created core infrastructure to the crypto story. You got to brush away the noise of there'll be no biases heading into what Sonic is going to do, because those are from people in 2021 that experienced whatever the fuck they experienced and however the hell they want to take their capital loss. So it's irrelevant. That's history. So Sonic going forward, so that's going to be very interesting. So in hindsight, actually, and Dan would appreciate this, and in hindsight, God damn it, Ramses was a good position. Holy shit. Jeeper Creeper, $73.90. That's lovely exposure. Wow. Ramses continues to suffer. They all continue to suffer. Let's take a look at the gecko, and we'll see. Nile should be on here. Velo, damn, down to 5.7. Where's Nile? I mean, come on, it's at 45. So everything suffered, but they're higher lows. It's all higher lows. Where's Ramses? Oof, 0.7 cents. This is literally like my entry point. I think it was zero point 0.8 cents. Or was it significantly higher and I'm taking a loss on it? But literally, shadow. You realize that, Arrow, shadow compensated for all losses for the trifecta of kingdom that we exposed ourselves to. Ramses, Nile, Cleo, and there you go. Shadow. It's like boom, but you still retain exposure to all of them. So you have additional exposure. So the net value of all of them is in the green, and you still have exposure to Arbitrum, Linnea, and Mantle. So now we just have free exposure to Sonic. You're like, oh my, it couldn't have been any better. All this shit gets monetized when the conditions are right. They're just not there yet, but they sure as hell look like they're heading in the right direction. For folks in the back of the class, total three. What does that red line look like? Up and to the right. So I hope that helps with the conversation. I know you guys go deep, and you guys know me by now. I keep that shit simple, and you can have these complex conversations, but there's always a very simple story underneath anything that's complicated, and that's just my curse of being a reductionist. I, I, I just the complexity is something I don't want. I just want the simple story, and that's pretty much the story I try and tell everyone. But you're talking about like cash reserves. That's important, but what is that story? What's a portfolio? Your cash and your investments. So that's how that part of the conversation reduces. It's not a healthy portfolio if you just have investments, because that means your cash position is taking in revenue from the investments, and you're literally spending all your money. That's equivalent to getting your paychecks from work and just living paycheck to paycheck. While on the other side of the coin is you don't want your cash position to be too large, because then that's savings, and savings is stupid. So what is a correctly sized cash position? It's not something for me to answer. It's a rhetorical question. It's maybe X amount of months of overhead, living costs. How many months? I don't know. Another rhetorical question. Oh, but here's an answer. The amount of months of overhead you should have in savings is what lets you sleep at night. Because that's the whole point of economics, is to allow you to be psychologically free, such that you have psychological well-being. And sleeping at night is an important contributor to that equation. I hope that helps. Kushti was talking about zero debt. That is an extraordinary component of wake up money. You need X amount of dollars to wake up in the morning based on your monthly overhead. And debt is one of the most unhealthy things you can have, or the potential to be unhealthy, meaning there is a capacity to have debt while also being in a good portfolio situation with regard to cash and investments. So obviously, if you could service your debt, you have wake up money under control, and therefore you have a state of psychological well-being. So debt is okay if you have it factored into the overall capital management equation, and you have things taken care of. Um, I mean, isn't that's the component? So think about it like this: debt gives you that fear, uncertainty, and doubt. Can I pay my bills? What happens if this happens? What are the implications? That's when you need to cure. So debt is reasonable if factored into the equation, but if debt is excessive, it becomes unreasonable, therefore a burden, and it's psychologically destructive. For myself, I am only able to accept a quantity of debt that I can pay off. So why would I have the debt? All right, maybe I don't want to pay it off all in one shot. Maybe I want that capacity if I needed to in an emergency situation. But the point is, the only way I could sleep at night is if I take on 10 grand worth of debt. Can I pay it if I needed to or wanted to? Otherwise, there's no debt. I can't deal with it. I can't stomach it. My psychological well-being would be impaired. But before taking on debt, contemplate what it will do to your psychological well-being. Hope that helps. Sir Joe, President, accounted for. Sir, yes, sir. George is in the house. Always a pleasure. Raul, hello. Arrow. Is there a way to measure total cap of all stocks? Someone, I mean, isn't, I don't know. Throw it into Grok or something or Chat GPT. It's probably an interesting number. I don't have an idea in mind of what you're thinking, what the significance of that number is, but that's generally what the Wilshire 5000 would tell you. It's just that's 5,000 stocks. And how many stocks are there? But that's a great expression of the overall state of the larger market, of which the S&P 500 is not that, and Nasdaq is not that. So there's a very isolated, myopic ETFs. Wilshire 5000 is much broader, significantly broader in comparison. Hey, Pusher in the house, analyzing charts seems like a job for AI. Exactly. But obviously, myself being a human, I have a purpose for looking at the data the way I do because it provides me psychological comfort and well-being. It lets me, at least from a human perspective, understand what the hell's going on, why it's going on, and how it may play out. It brings me comfort. With regard to trading, human traders are done. If you're trading as a human, you are at a significant disadvantage as compared to computers. Because literally a computer is instantaneously incorporating macroeconomic data and data from tangential uh, influences, just knock-on effects, knock-on effect, knock-on effect. It can literally incorporate everything into why markets are doing what they're doing in real time. We just cannot. We don't have that kind of context capacity, and AI really just do so much more than a human can. So the future of trading is clearly software. With regard to investing, I mean, computers can incorporate significantly more into the calculations, but um, humans have still that intuition, that gut instinct about what markets will do. It does come back down to, from a reductionist perspective, what Raoul says. Talks about 2030. Once computers breach that threshold of intuition, everything changes. That's really the horizon, and we don't see past that horizon because I just described to you that us as humans still have that intuition to speculate on what may play out, considering all the data we look at from a macroeconomic perspective. But that all changes. So, what does that mean? What is money? What is investing? What is business? What is work when a computer has infinitely more capacity um, than human intelligence? That equation, as you're rightfully pointing out, is changing. It's not yet there, in my opinion, with regard to investing, and trading is not investing. Peter in the house, much a pleasure. Talked on Discord about the idea of focusing on percent ownership. Sure. Listen, if you can own 1% of a company, that's a big deal. Warren Buffett prefers to own 30%, 50%, and become an influencer. He's the original influencer. The market cap, serve supply, percent ownership. Block tokens. Well, block tokens still have a capacity to be diluted by circulating supply becoming locked. Um, so yeah, it's meaningful. I like that perspective. If you own 1% of total locked tokens, you control 1% of cash flow. That's pretty cool. That's a powerful position to be in. Now, could that percentage change? Yeah, that's exactly what's playing out with Tango. At one point, it was like it was at 2.4% of all cash flow was going to me. That's diluted now significantly, which was expected. But that's what V33 cures to a degree with in different ways now with Shadow coming online. It's a different type of rebase. That's like a powerful type of uh, observation. If you own a significant percent of supply, that's powerful. Strokes your ego, which is meaningful. Heck of an achievement if you could own 1, 2, 3, 4, 5% of the cash flow of these protocols. Powerful position to be in. But don't make it complicated. Expect it to be diluted. What does it contribute to the grand equation? The grand equation is you have a portfolio of productive companies and the cash flow goes up over time, cyclically, higher lows, higher highs. What you own doesn't matter too much. What matters is how productive what how productive is what you own. That's what matters. Keeping coins liquid versus permalock. Well, liquid coins are not investments. If it can be sold at some point, anything not bolted down must be sold because markets are cyclical and it's just going to take the money away. So that's why anything that's not locked is not an investment and is part of the cash position. You can have volatility in the cash position. I currently define the cash position as Bitcoin and stablecoins. But technically, anything that is not locked is not an investment and is part of the cash position. Treat it accordingly. My 2 cents to keep it simple. Can you check out Flying Tulip as Andre's new upcoming decks on Sonic? I'm not interested too much in new. How do I find it? Oh, that's easy enough to find. See what's going on. Yeah, it looks like an extension of what he was working on with. Solidly. Okay. Very interesting. Big takeaway, no token, no investment. This is something that's interesting. This is tech. What do we think of tech? Great tech. It's not necessarily the greatest investment. And in this case, there is no investment. So this is interesting. You know what's interesting? No token. What's interesting is Andre focusing on the tech. And that's not something he historically does. So what is the knock-on effect of launching next generation exchange? Guess all these exchanges. What are exchanges? Exchanges are forex, foreign exchange. Is literally his grand vision, currency. So I'm quite interested in what he's building. I don't give two craps about investments. I have more than enough investments. But guess what? This story of what he's building has implications for our investments, for markets as a whole. What does it mean for the market? What does it mean for Sonic? And how does Sonic influence mainnet? How does Sonic influence Arbitrum, optimism? Everything. Everything affects everything. Everything has a knock-on effect to everything. Period. So this is certainly interesting to say the least. I wish I had 3 to 4x RAM size for Shadow alone. Oh my God, absolutely insane. Ramsey's great position. How many airdrops to get off the original investment? Yeah, that's what played out with Ramsey's. Um, uh, my 2 cents is the only one that matters was Sonic exposure. And look what Andre's building now. He's got a grand vision for the significance of crypto in terms of global financials. And I have always appreciated that. Whether the investments have done good or bad is separate and apart from the fact that a grand vision exists. And I look forward to seeing what happens with the grand vision. I think that the magic of crypto re-expose. Yes, yeah. You keep so Kingdom was the narrative. Velodrome is the super chain narrative. Just got free exposure to the entire super chain and any expansion thereof into the future. Hell of a narrative. So that was one of our core tenets that we were talking about on Discord as well as here. The best exposure is free exposure. So great investments are potentially what offers you potentially free exposure. That is a strong investment consideration, which is kind of the airdrop narrative, but not the dirty way to look at that narrative. Ooh, I want an airdrop so I could dump the position. I want exposure. I want to own businesses on markets and I want to get them for free. Not that I want to get an airdrop and magically it's worth, $1 million to sell it. I'm not thinking about it in terms of dollars. I'm thinking about it in terms of I want to own damn businesses as a grown ass adult and have exposure to shit to awesome networks for free. Simple. Keith, do you have thoughts on Celestia and are you still holding Atom position? Yes. I don't have thoughts on Celestia. I'm not interested in much from a Cosmos Hub's perspective. From Celestia, from the data perspective, all right, cool tech. Not interested. I've had exposure to Atom for years. Is it going on 5 years? So I retain it. Their what 21-day withdrawal period has successfully kept me in a locked position. Fuck it. It's of a size that I'm like, all right, it's just going to be what it's going to be. Whatever's going to come is going to come from it. Whatever happens, happens. That's the way I treat a lot of positions. Just let it be. Keep on cruising. Let it go. Let things play out. Slimming down, I see a little bit. I still got strength though, but I feel better. I take a variety of things. My big thing right now is inflammation. I'm big. So two things. What's the two big things for inflammation? What am I digressing here? Curcumin and gingerol. So notice curcumin is the concentrated component of turmeric, and gingerols is the concentrated component of ginger. So what you want is standardized versions. Easy to get 95% standardized curcumin and easy to get 20% standardized gingerols. Ginger is more expensive than curcumin. Obviously, 95% is extremely concentrated compared to 20% standardized. So it's much more cost effective to pursue anti-inflammatory agents using curcumin, and all this shit goes back to Ayurvedic medicine. That it's big stuff. And once you, well, brief digression, I swear, then I'll stop. What is inflammation? Why do people take Advil when they have a headache or they have a muscle ache? Why do you have a muscle ache? What is pain? All of it's inflammation. Inflammation is probably one of the single most un- not understood things by the general public. You're not in pain, you have inflammation that's causing pain. So inflammation is one of the most important things to cure. So anti-inflammatories. What is Advil? A non-steroidal anti-inflammatory. What there's steroidal anti-inflammatories. What is it? What are those steroid? I don't know. You take it after a surgery when you have inflammation because it's very powerful, but it's also not healthy on the system. So, what is the most um, what are natural anti-inflammatories? All right, great. Turmeric, goddamn root. Ginger as well. Powerful anti-inflammatories that you could just take. And it turns out they're also antioxidants and have just profound effects on the body. So my opinion and my for what I do for myself is very mega dosing of curcumin, standardized at 95%. And certain pains that I've had in my body have been alleviated, which makes sense because it does the same thing as Advil, and it allows your body to heal and be more functional, and it's healthy. My 2 cents. So that's the big thing that I'm up to with regard to health. Um, Potato, UWU, Noah. I don't know UWU, but I'm here for it. Cocaine is coming at some point. All right, it comes, it comes. Maybe we get free exposure because for the folks that still own solidly back in the day, maybe it's an airdrop to old school solidly folks. There's no emotion about it, meaning, oh my God, I need exposure. I can't wait for it to launch. Whatever happens, happens. The most important takeaway, maybe I end the stream on the Serenity Now, not the Seinfeld reference to it. Not Serenity Now. Um, oh my God, what do I always say? Seren- Not Serenity Now. He says Serenity Now. Literally, I'm in a brain fog right now because I got so much shit going on at work. I'm working on the legal docs as well. What do I say? Um, oh my God, someone hit me in the stream, and what's my favorite quote that I always say? Yvette, what's my favorite quote? I have so many. See, I can't even remember because I have so many. Mind over matter. Grant me the serenity. Oh, that's why. Serenity prayer. That's serenity now. Oh my God. Yeah. God grant me the things that I cannot grant me the accept the things I cannot change, courage to change the things I can, and the wisdom to know the difference. This is such a goddamn good prayer. Serenity prayer. Isn't that glorious? I can't do anything about it. Why should I even think about it? So I can't really think about anything, what's going to go on Sonic, what Andre's up to. So it doesn't mean anything. What matters is the things that I'm in control over. The things I'm in control over my health. I'm in control over my decisions with regard to capital management. In control over my capacity to understand the way the system works. Those are the things in control over. And the things that you're not in control over shouldn't impact anything related to your well-being. This is why politics is insane, and the way the general public handles political discourse. You have no control, nothing. So it's meaningless to think about. You just drive yourself nuts to the point where you're psychologically unwell. So don't do it to yourself. Most important thing to manage capital is to be psychologically well. Zero anxiety. Zero. Not just a little bit. Zero. If you don't have zero anxiety, you are not where you need to be. So think about that one. Think about what you need to do to cure your anxiety to get to where you need to be. Ladies and gentlemen of the crypto space, it is Monday, March 17th at 12:33 p.m. I appreciate all of you joining today. 229 people made it to the end of the stream, and you are all now a little bit more rational because of it. That is way too cool to see these numbers after all these years. You all have a good one. It's the start of a week. We'll be back Wednesday or Friday, and you know the drill. Until then, peace.